This is Julia Kempton, and the news this week focuses on one specific startup in an emerging economy, specifically the skyrocketing worth of Paytm in India. The parent company of Paytm, 197 Communications, went public last week and announced its goal of raising $2.5 billion in 3 days, which would make it one of the largest IPOs in India's history. Though it did worse than expected, it did raise well over $2.5 billion, signifying massive investor interest in stock markets outside of the US, Western Europe, and East Asia. Paytm is an e-commerce business founded in 2010. It essentially allows payment transfers along the lines of Venmo or Zelle, but it also helps users with financing larger purchases. It controls more than 40% of the digital payment market in India, by far the largest player. It attracted foreign investors early on, including Berkshire Hathaway and SoftBank, but its user base expanded dramatically in 2016, when India took 500,000 rupee bills out of circulation and started a run on many regional banks. When holding physical currency seemed riskier, the secure digital transactions offered by Paytm became much more desirable across a wide swath of the Indian economy. Today, interest rates are very low in India, and consumption has grown substantially as India's economy and security have recovered from a massive COVID-19 outbreak earlier this year. Many consumers now prefer tabless payments, which further drove up the value of the digital payment industry. Investors in the IPO include Abu Dhabi's Sovereign Wealth Fund, Ant Group, BlackRock, the government of Singapore, and several major pension funds. There were some estimates that 197 Communications IPO could value the company at up to $20 billion US. However, the shares for 197 Communications, Paytm's parent company, were oversubscribed by only 1.89 times. Another Indian startup, the digital beauty retailer Nykaa, had 82 times more applications than the available shares on its offer in its IPO a few weeks ago. Zomato, a food delivery app, was oversubscribed by 38 times the available shares in July. Paytm, technically 197 Communications, ended up raising just $3.74 billion in bids, although just is a pretty relative term here. Nonetheless, it's performative of something worth watching in the coming weeks, as it is indicative of the currently bullish nature of the Indian stock market. Traditional financial investment isn't always seen as a key factor in development, because it really only applies to nations which can ensure security and property rights for prospective startups. Yet it supports innovation and long-term economic growth in a manner that is more sustainable than simply aid, and wider in reach than microlending or NGO-led programs. IPOs and stock performance in India and the Global South will remain essential to the field of economic development for years to come, and researching it arguably supports the UNDP Sustainable Development Goals, number 9, Industry, Innovation, and Infrastructure. This has been the news with Julia Kempton. Now, on to the meeting.